Okay, another story. The African National Congress has added another agenda item to its much-anticipated conference this weekend. The new item is a discussion on corruption in the wake of the Steinhoff scandal that uncovered accounting misdeeds at the company.
ANC leaders say the conference will address the impact of corruption on the poor and on the image of the country.
That question is one of the most fundamental questions, actually, when it comes to ensuring that citizens in general, all round, are protected, including their pensions. That Parliament should not only preoccupy itself with holding the executive accountable only, but it should also take into account those matters that affect citizens that fall outside the ambit of the state. I know for a fact that according to reports from Parliament, Scopa would be calling in Steinhoff on this matter. And I think it shouldn't just end there, because if you remember, there are other parties that have been called by Parliament to deal with matters that actually affect citizens. So we are calling for, and as I would have said earlier on, we're calling for Parliament to look broadly throughout society and not just hold the executive accountable, but also look at matters that relate to what it is that affects our citizens out there.
Parliament's Oversight Committee on Public Accounts, Scopa, has also announced that it intends to call the executives of global retailer Steinhoff before Parliament early in the new year.
We are talking here about 17 billion rands of workers' pensions that was invested into Steinhoff. The UIF has an exposure of almost 500 million. What is clear is that the greediness of the corporate executives have overtaken all rationality and legality.
The scandal that engulfed the furniture retailer came to light last week when the former CEO resigned, opening a proverbial can of worms. The scandal shaved billions off the market capitalization of the German and JSE-listed company, and the share price sank to 5 rands. Along with the fortunes of billionaires, tanked the pensions of public servants invested through the Public Investment Corporation. Economists had much to say about the recovery plan announced by Steinhoff chairman Christoph Wiese, who unpacked a slew of initiatives, including the hiring of U.S. investment bank Mullis & Company and Alex Partners Consultancy to assist it with liquidity management to conserve the remaining cash in the business.
A lot will depend on those two strategies I spoke about. What can the company do to turn the situation around and to win the confidence of investors back, if it can? What strategies will it implement to do that? But secondly, also what action is taken to identify who is to blame, who is to be held accountable, and whether we can improve transparency.
On the back of all these initiatives, the share price rebounded 55% and continues to rise on the JSE. Steinhoff has its main listing in Frankfurt, where its shares rose 18% yesterday and continue to rise. Speculators have climbed in, and there is some buying of the stock off a low base. The company has delayed its regular annual lenders meeting in London from the 11th to the 19th of December.
The results have not been released yet, so what could happen from those results, if they are worse than previous and then worse than actually expected, looking at everything that's going on now, we could see a lot more damage actually take place in that share. So for me right now would be stay away from Steinhoff until the results issue has been resolved.
The Johannesburg Stock Exchange, where Steinhoff has its secondary listing, said that it would continue to allow the company to trade on this burst, as suspension of trading would not be in the interest of investors. Steinhoff also met with National Treasury today.